Okay, everybody, and welcome back to the second in our procurement series 2023, part 2, where we will today be discussing probity in procurement. And once again, I'm joined, as I will be for each of these, with my partner, Brian Ambler. So, Brian, welcome back. Good to do another one of these with you.
Thanks, Scott. Good afternoon, everybody.
All right, so before we get started, as normal, we'd just like to do an acknowledgement of country, where HWL Ebsworth would like to acknowledge the traditional custodians of the land which we are on today. We also like to pay our respects to elders past and present. Now, as I mentioned, this is part of a series, a 9-part series this year, which is just going to round the year off nicely, ending in late November. Doing one of these every fortnight between now and then. And of course, starting 2 weeks ago with our first one, planning a perfect procurement, setting up for success. And if you missed that one, you can get the link for the recording that was made of that, just like there'll be a recording made of this one today for you to share with your colleagues that couldn't make it. So that was that one. We've got probity this time, and next time, just to give you something to look forward to, we'll be doing a current issues and updates, talking about the NAC, the unsolicited proposals, and ECI processes. So we'll be covering off that next time. I'll leave you to read the rest of that slide for yourself when you go over it. The slides will also be shared with you as a link, as well as the recording. If there is anything you want to know about these webinars, or to register your interest and so on, there's an email address at the bottom there for you to do that, and that's contacting Katarina in our marketing department. Okay, so probity. It's always good when I do this presentation to start off with a bit of introduction and scene setting, which is how this starts. We then move on to talk about what is probity, and the various platforms, pillars of probity that there are, and going through each of those, about 4 or 5 of those. I'll do one of them, I think, and then hand to Brian to carry on. Then I'll pick back up for conflicts of interest, and then we'll have a look at conflict of interest quiz, which is always difficult with 200 registered attendees. So it's basically just taking you through some examples of conflicts of interest and how they might best be sort of resolved or considered or thought about. And those examples, when we come to them, are taken from the Department of Finance website, adapted a little for this presentation. But there's quite a few examples on there, actually. If you're interested in looking at those, you can find that on the Department of Finance website. If you have trouble, just reach out to me and I'll be happy to share the link with you for that. So by way of introduction and scene setting, this probity is really fundamentally about ethics, and we'll come on to a definition about it in a minute. And ethics and honesty and all those things certainly feature as a big part of that definition. A question that sometimes sort of pops up is how are professionals or professions rated? And fundamentally then a question around whether or not lawyers are ethical, for example, or public servants for that matter, and how they're viewed by society. And every year, the Governance Institute of Australia does an ethics index survey, which goes about just checking in and doing a comprehensive survey with communities and with people and so on to find out what people think of particular professions. And this is very much linked to probity when we get to, as I say, the public service and their consultants. And there's been quite a lot in the news about that lately, as you would know, which is linked very closely to this presentation as well. And we might talk about some of that later on. We'll save it for another day. And we welcome some comments or Q&As or chats in the chat function as well, should you want to engage around any part of this presentation or that. Anyway, but when it comes to lawyers, we are a part of a profession. And so we're bound by rules under the Legal Profession Act and the Solicitors' Conduct Rules, which are now codified, unified nationally now, or as of a few years ago. And they very much regulate what we do, how we do it, and our obligations around things such as confidentiality and duties to the court, to the client, and then to ourselves and our businesses. So and very much in that order, actually. So that's all well and good, but actually, so you'd think we do pretty well when it comes to these sorts of things, but unfortunately, you do get some bad news stories about lawyers every now and then in the press who are acting for certain elements of society, for example, or who might breach confidentiality, like that lawyer in Melbourne did a couple of years ago, where we start to drop down this rating. Anyway, unsurprisingly, we have the emergency services do very well every year in this. So firefighters, ambulance officers, and they have always done very well, but actually now top the list as a result of bushfires and the response to those a couple of years ago, and then the COVID pandemic as well. All of that did very well for community perceptions around these professions. It's then, and I've just picked a handful here. There's a whole long list of every profession you can think of. We've got accountants come in at plus 35. So plus 85 is the best. That's firefighters. Plus 35 is pretty good. Public service at plus 46 is also very good and shows that there's a high degree of trust in the public service, which is the sort of the administrative body where most of you work, administering the work of the government, really. But government, as in politicians, doesn't do very well, so they're at plus 5. And both of those have dropped over the years. So the year before, public service was 56, went to 46. Government was 16, went to 5. So there's been a reduction in community and taxpayer trust, I suppose, in what government does and how it does it. So there's been a reduction there. As I say, lawyers come in at plus 11. Real estate agents come down the bottom, or almost the bottom, which probably doesn't surprise everybody, but then politicians come below them. So federal politicians are at -3, so the worst actually in terms of politicians. State politicians come in at -2, and then local government comes in at +6. And you can take from that whatever you want. It's an interesting study that's done every year. It might resonate with you, or you might strongly disagree with some of those rankings and those ratings. But it's interesting to sort of keep an eye on some trends around it as well. So that's how it's relevant here, because it's saying, well, APS is bound by rules of probity, rules of procurement, and public sector rules and codes of conduct more generally. Are we doing a good job at that? One question, but then, we seem to be doing a good job. Are we trusted, by the people that we serve, by the people that we basically ultimately report to? So it's quite an interesting thing to keep an eye on. All right. The next one that's always good to look at as well is a study done each year by Transparency International. And they do a study around the Corruption Perceptions Index. And the most recently published one of those, the 2022 figures aren't quite out yet, but the 2021, this ranks countries basically. So on an international perspective, where do you come in terms of how transparent you are, or very much how corrupt is your government, or how corrupt does your government seem to be? Now, you've obviously got countries in Africa and Asia, and Korea, and places which come very far down the list, North Korea at least, and so on. So that's what it is. And if you look at that, you'd see that they come far down the bottom. Up nearer the top are the more developed countries and countries with a more trusted government. And I've got there just sort of 4 countries that come out on top. Interestingly, New Zealand comes in at number 1, ranked equally with Sweden. So that's good. Very good. Then we've got Singapore, interestingly, number 4, but they are, they're very, very regulated, very clean. The UK I put up there because it's always good to just do a comparison with the UK and see how we rank against them. UK comes in at 11. Then Australia is 18, and we keep slipping down the rankings every year, although they note in the report that one thing that has held us back from doing better in this particular report is the absence of a national corruption body, so the NAC, which we've now got. So we should do very much better now from 2023 onwards, and I'm sure that will lift, because that really was, as I say, stopping us going up to at least match, if not better, the UK. So there's just a couple of sort of interesting studies that are done every year that I just like to keep on top of, that are very much related to probity. We will now, I think, get into the substance of probity and look at some of the things around probity. And Brian, this is where I'll hand over to you to take over, and I'll come back in at conflicts of interest a bit later on. Brian, I think you're on mute.
Thanks, Scott. Obviously, the best thing one can be in terms of ethics is a New Zealand firefighter. They would rank extremely highly. So what is probity? Well, sort of starting with a sort of definitional guide, it's ethical behaviour and can be defined as complete and confirmed integrity, uprightness and honesty in any particular process, and that particular one's from the Macquarie Dictionary, and the ICAC guidelines from New South Wales and from the Commonwealth Department of Finance, Ethics and Probity and Procurement. The Commonwealth Department of Finance, of course, one of the Commonwealth agencies that does regulate probity, and particularly in procurement. So some other things that probity involves, it's more than just avoiding corrupt or dishonest conduct. I mean, that is part of it, of course, but it is more than that. It's ensuring or seeking to ensure that processes are conducted in a manner that is fair, impartial, accountable, and always in the public interest. Now, that final one there, of course, is there can be different definitions of what's in the public interest, because saying something in what one person's view on what's in the public interest may be different from somebody else's view. So that one's a little bit of a conjecture. It is also adherence to public sector duties, and we will go through these: impartiality, accountability, and transparency. So that's a sort of a general snapshot of what probity is regarded as. The other words that are sometimes used when describing probity is fairness. People, particularly in Australia, have a sense of what is fair, and certainly just because something's unfair doesn't mean it necessarily breaches probity, but the word fairness is sometimes used. And also, I've mentioned the word uprightness, which of course is a interesting word to look at, because technically it just means standing up straight, but in its wider definition, it means being straight in your dealings with somebody. Next slide, thanks, Scott.
Yeah, sure. Thanks, Brian. I think before I just flip over that in a sec, but coming back to this first bullet point under probity, where it talks about avoidance, more than avoidance of corrupt or dishonest conduct. And Brian and I work very closely together on a number of probity engagements, and so I know, Brian, that you'd agree with this. But most of the probity breaches that we come across are certainly not through abject criminality, corruption, deliberate wrongdoing. It's usually just people who don't really know what the rules are that they need to follow, fully understand them, or people are in such a hurry that they overlook them. So it's certainly, people, I think, generally fundamentally honest. There is obviously dishonesty around, but fundamentally they are honest, and that's where we find a lot of probity problems. So I don't know if you wanted to comment on that, Brian, before I move on.
Yeah, I think that's right. I mean, the corrupt conduct is, of course, covered. It is a crime, and so is fraud. But probity is something more. The other thing I think there too, Scott, sometimes, and I call this tripping over your own process. So people set up a process, possibly not necessarily thinking of all the repercussions, and then they get halfway through the process and realize, oh, hang on, this isn't quite how we thought this would play out. And then, of course, that puts pressure on the process and wanting to change it. And as we go through this today, you'll, and some other things in the other seminars, changing a process in the middle, particularly when you've published that and said what you're going to do, is a probity no-no. So some of complying with probity is not putting pressure on your own process. In other words, thinking about it up front. And a good example of that's evaluation criteria. We often see people quickly set evaluation criteria, and then when they're evaluating a tender, they go, oh, gee, these criteria aren't really measuring what it is we really want. And so that puts pressure on potentially seeking to change the criteria. And of course, that's a probity no-no, because people have relied on the fact that they're the criteria that are being used. But we'll expand on that later on in some other seminars as well.
Yeah, some of those examples of painting yourself into a corner, things like, mandatory criteria or things like, they're obvious ones as well. But you end up going, well, geez, nobody now complies. What are we going to do? Mandatory attendance at briefings. Oh, only one tenderer came. What are we going to do? And I know together we've dealt with all of these issues, but they're good examples of exactly what you just described. All right, I'll move on to the next slide for you now, Brian.
So this is just looking at, well, who is accountable, and this is a snapshot, of course. So and really some of the stuff we're talking about here in probity is coming from the perspective of a procurement or a tender process. So we have the probity advisor. Now that can be an internal or external person. Sometimes large organisations do have internal probity advisors, but often they're external people like Scott or myself. Members of the decision-making panel, I mean, they're obviously very important because they're the ones that are going to sit down and actually evaluate the submissions. So they need to be accountable for probity. Delegates, and what we mean by that is decision makers outside of the panel that then usually receive the report from the panel and ultimately decide whether the recommendations are going to be accepted or not. And also a whole range of advisors and that can be from the public and private sector. They could be consultants, they could be contractors, they could be people, experts within a particular government agency that are being used. They could be experts from another government agency who have been lent over for a process. So all probity needs to cover this whole field. And of course, in a good process, with a probity plan, all of these people should, who are involved, should be probity briefed. And one of the good processes in a procurement is for all those people to have a briefing a little bit similar to this seminar today about what probity is, what it means, what it doesn't mean, what is their probity obligations. And of course, a good process will record that those particular people have been briefed, and that assists the probity. The other perhaps fifth element that could be added to this slide, but we just keep it sort of within the team with the procuring agency. But you could also add in the tenderers there as well, because they, of course, have probity obligations. They have other obligations as well when they're putting in and submitting tenders in response to a request for tender. But of course, they will potentially come to briefings where a good process will have a probity briefing as well. And some of the elements that we're going to go through a little bit later in this seminar are elements that also apply to the tenderers, confidentiality, for example. Okay, we might move on unless you've got any comments there, Scott.
Oh, just, and you'll remember, Brian, about 20 years ago, we were involved together on the integrated ticketing project, which resulted in a case, the Cubic Transportation Systems versus New South Wales. We weren't directly involved in that case, although tangentially, but out of that case came a judgment, and the judge said very clearly, which is quite interesting in terms of probity advisor appointments, because one thing the New South Wales government wanted to do at the time was to say, well, we can't be responsible for this, what happened, because we engaged a probity advisor and we followed their advice. And the judge said, you can't abrogate your responsibility because fundamentally that's yours by engaging consultants. So that's an interesting decision. 20 years ago, obviously, it's got some recent relevance as well to some of the things that are being found. But in any event, just good to get that out of a judgment. I know there's some lawyers that tune into this, quite a few actually, so you might like to look at that case, that's all. All right, next one, Brian.
So these are regarded generally as the 5 principles of ethics and probity in procurement. So we're going to go through each of these in a little bit of detail. So the first one is best value for money, managing and dealing with conflicts of interest. And of course, in that space, and Scott's going to be talking about conflicts of interest, but in that space, we've seen some pretty dramatic repercussions of not complying with conflict of interest and not managing conflict of interest, particularly in New South Wales, with a number of premiers losing their positions over conflict of interest. Impartiality in decision making, so not being influenced by bias and conflicts. Accountability and transparency. Now, these last two are a little bit interesting because they're sort of diametrically opposed to each other. Accountability and transparency, particularly transparency, means, you know, having a bit of an open book and other people being able to see what we're doing. Confidentiality, of course, is the opposite of that, saying, well, we have some information, but we can't tell about that. So we'll be going through those and just applying those to the procurement process. So I'll talk about best value for money now, which is, I think, the next slide. So, oh, sorry, we've still got some more principles to go through. So officials must act ethically in accordance with the Australian Public Service Values, which is a published document. They must not make improper use of their position. So that, of course, impacts on doing things for their own benefit or even for the benefit of their particular group rather than for the benefit of the Commonwealth. Officials should avoid placing themselves in a position where there is a potential for claims of bias. So that relates very much to the first one. And that relates to conflicts of interest, of course, particularly, which Scott's going to talk about. Of course, we have all sorts of Commonwealth rules about hospitality gifts and benefits, which are reasonably clear, and is, you know, only a very minor thing that you can accept from anybody without breaching those rules. Sometimes organisations have their own specific rules as well, so that's something to watch out for, but there are general rules that apply. And basically the rule of thumb, of course, is you can't accept any gift or hospitality or benefit. And that is particularly heightened. I mean, it always applies, but it is particularly heightened if you are in a procurement process and if you're involved in setting the request for tender, for example, or the specification, or particularly if you're evaluating. And we've had some examples where tender evaluation panels have unfortunately not complied with making sure they don't always have benefits or hospitality given to them. You know, during a procurement process, whilst probity always applies, during a procurement process, it's really a heightened period in respect of probity for that procurement. And, you know, we have a lot riding on it. People spend a lot of money putting in tenders, and they expect that these things will be handled and managed and that the process will be free from bias and will have a clean sheet for probity. And that is an increasing expectation of tenderers, and they look out for it. Agencies must not seek to benefit from supplier practices that may be dishonest, unethical, or unsafe, which may include tax avoidance, fraud, or corruption. So that's something to watch out for as well, in that, you know, if you are aware or become aware or even suspect in a tender process that one of the suppliers is doing something that then could be passed on to the agency as a benefit or a lower price, for example, in a tender, that needs to be watched out for as well. All tenderers must be treated equally, and really that means they all as well must be treated fairly. But it does not necessarily mean they all. Sorry, I said equally in that first bit. It's equitably, so that means they have to be treated fairly, but not necessarily equally. We try in a procurement to treat them equally, and a good example of this is in the provision of information, and in particular looking at the incumbent tenderer, the incumbent being a tenderer who is the existing contractor. Now, it is very hard to totally equal the information that a existing contractor has about a particular procurement, if it's the next iteration of the procurement. You can never put all the tenderers in exactly the same place, and of course that's the same even if there's not an incumbent, because different tenderers have different people, they have different skills, they have different histories, they potentially have different structures, they might have different intellectual property, they might have different approaches. So you see they're not equal, so it's very hard to treat them equally. But for example, in the case of a strong incumbent, there are things that can be done to try and what we call level the playing field. So for example, with a strong incumbent, you would strive very hard to provide a very high level of information to the other tenderers to try and make sure that they are aware as they possibly can be of all the issues in and around the procurement. Now, of course, you have to stop short of breaching any intellectual property that is owned by the incumbent. But this is all part of treating tenderers equitably. Other examples of this relate to the time in putting in a submission. For example, a particular tenderer shouldn't be given extra time. It also relates to answering questions about the tender process. And that's where the rule of thumb comes from, that pretty much all questions asked by a tenderer, the answers will be distributed. The question and the answer will be distributed to all tenderers. Again, there has to be a lens put over that of intellectual property and breaching potentially somebody's intellectual property if they ask a question that could disclose their intellectual property. But that's where processors can step in and perhaps put the question in a different way or redact the question in some way. But the basic rule of thumb is that all tenderers get all questions and all answers in relation to a tender process. So that's another example of treating everybody equitably. And finally, and Scott's going to do the detail of this, obviously conflicts of interest need to be managed. So we might move on. Some other principles there. Conflict of interest and probity requirements should be applied with appropriate and proportionate measures informed by sound risk management principles. Look, it's not one of the reasons I said that previous thing is a rule of thumb is because that overlaid on top of that has to be sound risk management and proportionate measures. So I've already sort of given an example of that, where obviously it would be a big risk to breach somebody's intellectual property. When you say, oh, but hang on, I'm complying with the probity requirement of telling everybody telling everybody equally all the same information. Well, no, risk management says you shouldn't do that if it breaches somebody's intellectual property. Value for money outcomes are best served by effective probity measures that do not exclude suppliers from consideration for inconsequential reasons. So one of the examples here might be late tenders. If somebody's 11 seconds late, although the Commonwealth in some places does have very strict requirements on this. If you're late, you're late. But an exclusion there is often if that is somehow the fault of the Commonwealth. But we need to be careful on this, and you'd need to look at the Commonwealth procurement rules and what that says about it, and what the RFT itself says about, for example, late tenders. but inconsequential reasons. Sometimes somebody can make a mistake. You know, the comma in the wrong place of the price, and it's 10,000 instead of 100,000. Obviously, the consequence of that would be terrible, but it's an inconsequential thing to mistakenly have put the comma in the wrong place. And there are many, many other examples. And if we've got time, we can go back to some other sort of war stories on a lot of these things at the end of this session. Confidential information must be treated appropriately during and after a procurement process. I've been using intellectual property as an example, but confidential information is quite similar to that. Obviously, in intellectual property is another part of that, and really, external probity specialists like Scott and myself should only be appointed where justified by the nature of the procurement. You can't have an external probity advisor for every procurement, but what you can do is when you do have one, use that to learn effectively for other procurements. Did you want to add anything to that, Scott, before we move on?
No, man, I think you did that. You covered that very comprehensively. That's good. Thank you.
Okay. Well, I just want to talk now about value for money. And of course, the first thing to say about value for money is that it does not mean the cheapest price. So price is not the sole factor. And really, what value for money means in its shortest possible description is balancing price against quality. Now, quality is measured with all sorts of things, and I'm using the word quality there in a general sense, but you can see there we've listed some other things that come into the issue of quality: fitness for purpose, experience and performance history, particularly if it's a service contract, for example. Flexibility, can things be changed? Does somebody have the ability to adapt over time? Environmental sustainability, and of course we've got net zero to comply with there now. Whole of life costs, which I'll talk about in a minute, and broader benefits to the Australian economy if the procurement is greater than 4 million. Now, I just sort of stop there and say as well that this expected interrelationship between price and, you know, that something that's more expensive should be better isn't necessarily correct. And I'll just give a sort of a little example to sort of show that. So I have 2 motor vehicles that I'm prepared to sell, and I'll sell one of them for $1,000 to anybody, and I'll sell the other one for $300,000. Now, as soon as you hear those 2 prices, you will have a view about the quality of those vehicles. And your view about the quality may well be correct. But in procurement, it's not only about quality, it's also about what you're seeking to achieve and what you're seeking to do. So, of course, the $1,000 car, you'll think, well, that's going to be pretty old. It's going to be pretty clapped out. It's not going to be very comfortable. It's not going to be very modern. $300,000 vehicle, you would expect to be pretty good. That's a very, very expensive car. You'd expect it to have, you'd either expect it to be some absolute old classic or a modern vehicle with all the things. And so generally speaking, the $300,000 one would be of better quality. But, and here's the point, we also need to look at what our intended purpose is for these vehicles. So I think up till now, we'd all agree, well, the $300,000 one's got to be better. It's got to be better than a $1,000 vehicle. Now, what is the purpose? Well, what we want to do with this vehicle is we have a country property and we don't even need to register this vehicle. And what we want is a vehicle to move hay around to feed our sheep. And it just so happens the $1,000 vehicle is an old Ute, and the $300,000 vehicle is a Ferrari. Now, of course, therefore, when you look at the purpose, the $1,000 vehicle in this case fits the purpose that we want so much better than the more expensive one. So you can see it is not just all about price. Now, whole of life costs, I think we've got a slide on that next, Scott.
Yeah, I think we do. And I just want to say for anyone, so these come from the CPRs, it says at the top there. For anyone who's not seen the environmental sustainability, the Australian Government Sustainable Procurement Guide published by the Department of Climate Change, Energy and Water, it's very good, and it's got some schedules that you can include in tenders and some other things. So it's a good guide around sustainable procurement, which is very important and fundamentally part of what value for money is. All right, Brian, whole of life costs?
Yeah, so whole of life costs is about not just measuring the cost at the time of entering into the contract. It's looking at things throughout a whole period. Now, obviously, that doesn't apply to everything. It more applies to more complicated machinery and other things. But a very, very good and simple example of looking at whole of life costs is if you want to buy a printer to print out documents. The cost of the printer, while that will be one issue, perhaps a bigger and more important issue, over the 3 years of the life of this printer, you will have to buy printer cartridges. And so the price of the cartridges becomes a very important factor, possibly a more important factor than the equipment, than the upfront equipment price. And so it is the whole price of operating that piece of machinery for the 3 years that needs to be looked at. And of course, in accounting, these things have obviously operating expenses and capital cost differences as well. And so that can all be done. So we're looking at things like maintenance and operating costs, transition out costs, how much does it cost when we're finishing up with this, licensing costs, particularly if there's if it's a IT product, of course, the original purchase needs to be balanced with how much the licenses cost over time. Cost of additional features procured after the initial procurement, so add-ons and extras that we might be able to obtain, and we're not sure if we need them at the moment, but if we do need them, we would want to take into account what sort of cost that is. Consumable costs, example of the printer cartridge is a perfect example of consumable costs. Decommissioning, remediation and disposal costs. So the printer cartridge is a good example there. If it's one that you can't throw away into a normal garbage and you have to pay somebody to take it away versus a different one that you may not have to do that, that is obviously a difference in the price. Now, all of this, of course, when you're looking at costs over time, you can do, to make it more accurate, what we call net present value calculation, which basically prices all these things in today's money rather than future money. Because one of the issues over time, of course, is any potential cost increases, but it's always that's an impossible thing to actually measure. But there are methods of doing this which financial advisors can apply to a procurement process. The other thing to mention, of course, here is that there are many ways of dealing with the interplay between price and quality in a procurement situation. One, of course, is to weight price with quality. So you might have price weighted at 30% and everything else weighted at 70%, or some other percentage, of course. And what that percentage will be very much dictated by the complexity of the transaction. If it's something simple that there's not a big issue about quality, then obviously the weighting on price would be higher. If it's something complicated where quality is very, very important, for example, a a part to go in a jet engine of a passenger jetliner. Obviously, price, quality would be, certainly from a passenger's point of view, quality would be the most important factor. So those weightings can vary depending on the items being purchased. The other thing, of course, the second fundamental way, and there are many ways of doing this interplay, but the other thing is to not weight price and to weight all the other things, evaluate those, and then do a value for money assessment afterwards. And that often includes looking at the varying prices in a tender situation against each other. So and then reviewing those back against the quality of the goods. So there's many ways, all of which comply with probity, but fundamentally we do have to set out what we're doing and how we're going to do it, and stick to it. But the important thing that we're trying to get across at the moment is that the proper evaluation of price is not just all about the upfront price. All right, well, I'll hand back to Scott, who's going to go on to look at conflicts of interest.
Thanks, Brian. I think we do a long session as one of these 9 on tender assessment. We'll go into a bit more detail on some of the things you were talking about then as well, so people can look forward to that. And I think you'd agree, Brian, that since we started procurement together 25 years ago or so, where people tended to focus a lot more on just the upfront acquisition cost, there's been a big push, and people and organisations are getting much better at looking at the whole of life cost now than they ever did before, and that's been driven by changes to guides and policies and other things, but it has moved a long way. Okay, so confidentiality of information, just before we get into conflicts of interest per se, but nonetheless, confidentiality is a big part of probity as well, and linked a bit to conflicts of interest. It's sort of they've got this inexorable link anyway. But confidentiality is important. We normally get people involved in tender processes. Well, every time that we are advising on a project, we ask people to sign a code of conduct, which is just a document that reminds people of their confidentiality obligations, and is also a place where they can disclose a conflict of interest should they have one. And we'll come on to that in a second, as we said. When it comes to APS employees, they don't need to sign a deed of confidentiality because that's already covered by the public sector code of conduct anyway, which is entrenched in legislation and comes with significant offences for breaching it. But all advisors should sign a deed of confidentiality as well as the code of conduct, because the code of conduct isn't an obligation of confidence, so to speak, whereas the deed of confidentiality is. The external consultants not bound by APS codes of conduct, so you've got to get them on the hook for confidentiality. That includes us, and we're quite happy to sign deeds of confidentiality when it comes to advising on these projects. But sometimes you get a bit of resistance to that, but it is important because it's the only place to capture that. People need to be somewhat careful of conversations they have where they're talking around what they're doing at work, for example, or on the telephone. People might speak on public transport, on phones, and talk around the office, around the water cooler. So that's something to be a little conscious of and to be cautious about, because really, whilst an evaluation is going on, everyone wants to know how it's going, or who tendered, or how, who's looking good, and so on. But it's just not appropriate for the committee to have any discussions around that outside of the evaluation committee circle. And sometimes there's a tendency to do that, and it shouldn't happen. Obviously, the next one is around the papers that are generated through a procurement process. So that is the evaluation committee notes and other things, the tenders themselves, the actual submitted tenders. People just need to be mindful of where they're working, whether their screens are open when they walk away from their desks, for example, and where they might leave papers on their desks and those things. So that's important. Then we've really got to think about who's got access to a shared IT system, folders, and whether or not people who work together might share a mailbox and folders as well when they're not involved in an evaluation. So that's also important. The other thing we see which can lead to breaches of confidentiality is social media. So posts on Facebook or Instagram or other platforms. Used to happen, I think, a bit more a few years ago when these things were used more prevalently, but we've seen people become a bit more alert to that since. So it's not such an issue now. But when you go around taking sort of photographs on site visits, for example, or selfies with a client, with a government person who's involved in a tender process, and that gets uploaded onto LinkedIn, for example, right in the middle of a tender process, then that will lead to other tenderers thinking, well, there's a close association here and things like that. So social media is not a good thing and can lead to some problems. And the same with people publicising their involvement in a process, be that a tenderer or a committee member or a consultant or whatever it might be. It's just not appropriate to go around publicising those sorts of things whilst a process is ongoing. Right, so conflicts of interest. We've got a definition here, and it's quite sort of simple, really, in terms of what one is, but it's really, people often don't spend enough time thinking about what a conflict of interest is, and people get scared of conflicts of interest, and they are unwilling to sort of say that they've got one when they clearly do, because they think there's some wrongdoing behind it. And so it's a good idea to get some training or get some understanding behind conflicts of interest for those people involved in a process. Otherwise, they may not fully understand the importance of it, and they may also, as I say, be a bit cautious or worried about disclosing something which they shouldn't be, because the only issue arises where a conflict that should have been disclosed wasn't. So by way of definition, it says here, a conflict of interest arises where an official, advisor or supplier has an affiliation or interest that might prejudice or be seen to prejudice impartiality. So that picks up on actually having a situation that might prejudice or be seen to. So there's that perception comes into this definition, a perceived conflict. It's not just a fact of something, it's also whether somebody might think something becomes relevant. And it's all about impartiality and remaining impartiality, where you can make decisions without fear or favour or inappropriate influence. When it comes to sort of running through the issue about whether you've got a conflict or not, it's good just to sort of go through a test, and this test is tried and true, and it brings together two sort of streams of a person's life, and that is their public life and their personal life. And it's where those two have a conflict or intersect, or there might be an issue between those two streams that there's a problem. Whilst ever there's no conflict or issue between those two things, then there isn't a problem. So the first thing that you want to sort of look for is, well, is there a personal interest or affiliation here in what this person's doing? Do they have a personal interest or an affiliation related to something that they're doing? Maybe. And if they do they have a public duty? Well, they do have a public duty because they're an APS employee, and the public duties are well set out in the various pieces of legislation that need to be complied with in terms of probity and procurement. And then, is there a connection between that personal interest that they've got and the public duty? So the public duty to make decisions fairly, appropriately, equitably, applying value for money, remaining impartial, keeping information confidential. That's the duty that somebody might have in a procurement process, but they might also have a personal interest in a decision or an outcome or the process more generally. They might know someone, they might have shares, they might be involved in a soccer team and play with somebody who they know is tendering. Just a couple of random examples. And if that's the case, then could a reasonable person perceive the personal interest might be favoured and affect the impartiality of that person? So that's the test that is propounded by the Commonwealth Government around this, and it's quite a good one, pretty straightforward. You just go through each of those stages, and if you come up with a yes for each of those, then you've got a conflict that needs to be dealt with. And conflicts of interest are becoming more prevalent, more complicated, and certainly in recent times, in the last month or two, they're becoming much more strictly applied in terms of the management behind them. And so, certainly something that I know Brian and myself, both on separate engagements and together, are called on to advise on increasingly. As I said before, it's not wrong to have a conflict of interest. It's only wrong if you don't disclose one, and that's a very important point because people can be a bit afraid to come forward. But really, there's nothing to be afraid of. You should absolutely disclose. It's an ongoing issue around conflicts. It's something you need to keep checking in about. So when you get the tenders, well, before you tender, you know who might tender, so you've got to get an idea then. When you get the tenders, you know who's tendered, who the subcontractors are, who the key personnel are, etc. So check at that point. And also along the way, you might have a tenderer contact you to try to get influence you or to try to get some information around a process. So, you've got to keep on asking the question, has a conflict arisen? Is there something I need to disclose? Is there something I need to check in with the probity advisor about, be that an internal or external advisor? And then at the bottom there, usually it's obvious, but in other cases, it's just a sort of personal feeling. You think, oh, geez, I might have a conflict here. I know whenever I'm asked by somebody, they say, look, I've got this personal interest. Is that a conflict? And basically, they've answered their own question, because if they think that there might be a conflict there, then somebody else will. And so the perception's there at the very least, and in which case it needs to be disclosed. And often that's the best and the way to manage it, and you don't need to do any more. Ron, we're slightly short on time, but I know that this is an area that you're interested in as well and advise on. So if you've got anything quick to add, I'd welcome that.
Yeah, look, just quickly, one of the rules of thumb of what you should consider, and there's a detailed slide coming up, but a rule of thumb is looking at your personal position, brothers, sisters, friends. Secondly, your professional associations. So what are you doing now, and what have you done in the past? Now these are, so you might have previously worked for somebody who is now a tenderer. Now that might have been 2 years ago. But it still might be relevant because you might have knowledge about how they work. And finally, of course, is your financial position, whether you have any financial interests in anybody. Now, there's an arm's length test applied to that. If you're in a super fund, for example, and they have investments, you don't really, a big super fund, you don't have any ability to control that. But if, for example, you manage your own superannuation fund and you directly control where the investments might be, that would be considered close. So just recapping, it's your personal position, your professional position, and your financial position that, as a rule of thumb, you need to look at and consider as to whether you have a conflict. I also just want to stress that point that Scott made, because it really is important. People with conflicts of interest have not done anything wrong. Where they will come unstuck is if they don't disclose them. So even if you have an inkling that you might, and I think Scott made this point, once you have an inkling that you might, the chances are that there is something there to disclose, or certainly something that somebody else with a perception. And of course, people's perceptions change over time. Somebody's perception when they're a tenderer, thinking they're going to win, becomes very different once they're told, sorry, you didn't win. And so we have to plan for the perception being quite a difficult perception. Thanks, Scott.
Okay, mate, thanks. So yeah, as we just sort of started to go through there's a few different things or buckets that your interest might fall into. Might be related to money, so that's a pecuniary interest. They're usually the hardest ones to deal with, where they are not, where they're not at arm's length. So as Brian mentioned before about the super fund, that's fine. But if it's a bit more immediate, personal shares or whatever, then certainly that creates a real problem. We've had that recently, where somebody might also be on a committee advising on a steering committee to government, whilst also being a director of a private sector company which is tendering or is interested, and they have a bonus linked to the outcome of the steering committee's decision. These are all real examples that I've had to look at over the years. It is just, that's an untenable position. Most conflicts are managed through just mere disclosure, but things like that are too hard to deal with, and you want to sort of close that off as quickly as possible. So financial, family, secondary employments, affiliations with certain groups and bodies and things, sports associations, professional and community and ethnic groups, obligations because of where you live and who you live with, just feelings you have towards others, whether you like them, dislike them as individuals or as groups, then that's an issue. Significant family relationships. Other things that the factors that become the heightened risks are highly specialized skills, where demand for skills frequently exceeds supply because you often then have to reuse the same consultants. So in those sorts of projects, conflicts of interest will more likely arise. And then future employment prospects, so where people have got medium-term plans to exit the public service, for example, and go into the private sector. Well, if they've identified where they're going to be working in the future and that entity tenders, then you've got to keep a close eye on that. So that's just a group or a list of things to help identify conflicts. If you do find a conflict's arisen, either perceptively or actually, then all of them have to be disclosed and a formal register of them. That's absolute. Confidential disclosures are possible, so put a disclosure through to the probity advisor because you may not want your colleagues knowing that you are looking for a job somewhere else, for example. And so you can also just withdraw from a process rather than have to deal with a conflict. Just withdraw without disclosure, provided you've not made any decisions yet. Then that's also fine because again, there are some things that you don't want, or there's no reason to bring up because you can exit before it becomes an issue. Said it's better to disclose than conceal. We've said if you're in doubt, then disclose the conflict. There's been a few, these have been around for a few years, ICAC in New South Wales and the Queensland Crime Commission in a sort of joint paper they wrote about 15 years ago. It's the Conflict of Interest Toolkit for the Public Service. It's an excellent document. It's about 170 pages worth of conflicts of interest, where they arise, some case studies and what to do if you find one. So if you're particularly interested in taking your understanding and knowledge of conflicts of interest further, that I can recommend that to you, but there's a lot of material there and it's mostly good. And one of the things they do is to go through these strategies on how to deal with them. Registration, they call it the 6 R's for obvious reasons. Registration being the first way to manage a conflict, and it's asterisked because that will deal with 9 out of 10 conflicts in our experience and does. Where it doesn't quite deal with it entirely, then you may have to adopt some other strategies. Those include restricting somebody's involvement, recruiting somebody in to sit next to someone to make sure that they are making objective decisions, or replace them for certain parts of a procurement process. The next one, more extreme, is to remove somebody entirely, in which case you'd also have to then recruit. So either you restrict or remove, you've got to do something around recruiting just to fill the gap. Next, as I say, in sort of levels of extreme, you go on to relinquishing the private interest. So you sell the shares, or you stop being friends with someone, or you stop playing sort of soccer in that team, or whatever it might be. You relinquish the private interest. And lastly, instead, you could just resign from your government position, and that will also deal with the conflict. So they're all the ways of dealing with them. They get more and more severe as we go through, but really registration tends to deal with those. ICAC in New South Wales, which it doesn't regulate obviously the Commonwealth government, but nonetheless it's always good to draw on other sources, and they've written a 20 or 30 page guide to conflicts of interest in the last couple of years, so it's current, and takes that sort of 6R approach a bit further and talks about amending involvement, so changing somebody's involvement in something. So this is really restricting, but just by another word, and it also goes into the detail on what you do there. That's to reduce duties, reduce someone's seniority, ensure that somebody else is involved as well who's more senior, exclude that person from certain decisions and discussions and meetings, limit their access to certain systems, place them in an advisory only role, not a decision-making role. Next, exclude them from critical record keeping, because you can create your own history by if you hold the pen, then that's the source of truth, and that can be an issue as well. And lastly, prevent them from dealing with external parties. So that's amending involvement. You can amend influence by transferring a matter to another unrelated unit or team. So therefore that team that was otherwise going to deal with it has no ability to influence it. Or you can inform other people dealing with the matter there's a conflict and ask them and instruct them on how to meet probity requirements. So there's some good tips on what to do for those things. You can change a process as well. require a more detailed and documented process, design a decision-making process so that it's more objective and take away discretion as much as possible. That's difficult, but these are just suggestions, and maybe in a particular procurement for particular decisions that's possible. And I've recently been attending a lot of conferences on AI decision making, actually, and that's certainly a way of the future and how some of this might be done to reduce conflicts, but that's a whole other topic for another day. Next is documenting, publishing reasons, obviously creating good recordings of key decisions. That's all around accountability and transparency is good record keeping. Conducting post-completion audits, or probity audit at the end, you might do that. Put in place internal controls to identify deviations, and appointing probity advisor. We've got some key probity documents here, which you tend to use to support most procurements. When there's a probity advisor, you'd have a probity plan, a procurement conduct plan. You might have some specific protocols around certain things like communications, direct negotiations, things like that. There's a code of conduct, I've mentioned that already, which then gives rise to a register of the conflicts that will be disclosed, a communications register. There'll be ad hoc probity advices for probity issues that arise. There might be deeds of project participation, which is really just something that you get tenderers to sign to access a data room, and it will be a sort of document that releases you from liability for the information in the data room, and also ensures that those documents they access are kept confidential, so they're sometimes needed. You might have a probity deed. That's where you might have a parent company with a couple of subsidiaries, both of whom might be tendering. And if they are, then you want to put in place a probity deed to manage the information barriers between those parties. So that's where that comes up most significantly. Statutory declarations, where tenderers say, I promise I'll do this. So they say that at the beginning, and at the end they say, I promise I did that. So this is, I promise that I won't, that I'll use a separate team to tender because the previous team, or this team knows you so well, so we'll use a separate team. So stat decks are often used really to give some legality to certain things that you're requiring tenderers to do, which they otherwise wouldn't do, or perhaps wouldn't want to do. Keep minutes of meetings, records of all decisions, and lastly, we do all a probity report is kept. I've really got a lot to say here around probity advisor and probity auditor. They're sometimes used confusingly and interchangeably, but they are different. So really the easiest way to think about it is a probity advisor advises on a project along the way when it's sort of in place, maybe at the beginning, through its journey, to make sure it stays on course and steers it around different corners or tricky bits that might need to be advised on. And then a probity auditor, as the name suggests, any audit is really a sort of post-fact review of what's happened. So that's really the fundamental difference. Brian and I tend to do, we've done both, but I think the advisor role is a lot more rewarding because you can actually keep the journey on the right track. But we certainly have done both and continue to. When do you use probity advisors? There's a list. Again, the ICAC have published some things around this, as has other Department of Finance, ANAO, around when it might be best to use probity advisors. Obviously, things that are high value are more contentious, where the integrity of a project might be questioned, where there's a pre-qualified or limited tender process is proposed, and the integrity of a selection might be questioned. So if you're saying, I'm allowed to do a limited tender here because it qualifies under the CPR, so I'm going to go to those 3, but there were 10 you could have chosen from, you're leaving 7 out, there's a good chance those 7 might say, why didn't you pick me? Now, you do need to justify the decisions you're making to ensure value for money as an overarching principle, but you are allowed to have a limited tender if the CPRs allow you to, but that's what that's getting at. Where there's been a history of controversy litigation, where something's politically sensitive, where a particular market makes a challenge likely, so strong competition or commercial and confidence issues is particularly important. And lastly, where there's a high likelihood of material conflicts. So you want a probity advisor there. Other places where you're doing an ECI, early contractor involvement, or interactive tendering process, there's a lot of touch points, and where there's touch points, there's probity danger. So that's another example. Another one is where you might appoint a probity advisor partway through a project when you didn't have one before, but you now need one, because something's popped up that you weren't expecting that needs probity advice. A good example is all tenders coming in over budget, and then you needing some probity advice around where to next. And that's the sort of engagement that we have, that we come across as well. Some final tips here. Don't set up process rules which you don't follow. Some of these we've touched on, so like mandatories you can't stick to or might leave you with a problem. This is painting yourself into a corner. Don't change criteria. Make sure the advertised criteria is strictly observed. Use a probity plan. Keep very good records. Act on probity process issues quickly. Make sure all conflicts are declared. Understand the probity risk that comes with incumbents. So when there's an incumbent service provider, an incumbent contractor, it doesn't mean that the process is impossible, but it certainly creates, in fact, far from impossible. This happens all the time, but it does create some probity issues to manage around leveling the playing field as best you can. As Brian said in one of his slides, you can't equalize, and you don't have to, and the CPRs are very clear on this. It's not about making sure everyone is equal, but it's about making sure that everyone is treated fairly, equitably. So that's really the point. And make clear statements about treatment of late tenders. So that's some final tips. Now, I think I might leave you to have a look at these quizzes yourself, only because the answers are below, really. So this is from the Department of Finance's website, gives you some scenarios, there's 5 of them. And then underneath each one, so here you confirm the facts that are above and then monitor the situation. So you can go through these 5 little slides yourself, I think, given the time we might do that. I don't know, because I haven't got visibility, whether we've got anything on the chat or Q&A, but I don't think we do. So I think what I'll do is I'll leave it here and just say thanks for coming. Look forward to seeing you next time. Brian, you might like to do similarly, and then we can sign off.
Thanks, everybody. And as always, if you've got any questions, flick us an email.
Okay, thanks. Bye.